Hey, good morning, everyone. Welcome to the Morning Brief, Friday, May 22nd. Thanks for stopping by. Exciting news for today as I finally have the tech support that I've been talking about for a couple weeks now joining me today. So with that, please be patient. We will not be perfect on our end. This is our basically first dry run, but excited to have another member of the team. As you can see in the chat there's going to be things where I'm talking and somebody is typing as me in the chat. Well, guess what? That's our tech support person who's helping us out. And again, like I said, if you're having any issues, there's the email account to send it to, which isn't a big deal. We have 7 of us this morning. We've been averaging kind of 9 to 18 as far as the attendees, and I expect a couple regular names will be checking in here pretty quick. So that's where you would send the my sound's not working sort of thing, is to get that out of the chat where you may not want to share that with everybody. You can take that over to a private email exchange, which is being monitored. So with that, let's talk about our objectives for today. The standard 3: capital appreciation, preservation, and income generations. For tactical objectives, primarily internal training for my team on this end, so we can get things. If you notice, there's a different angle in the room, and there's some distractions, so a little bit of learning on my part there. But a new computer set up for us, and this is where the final brief is going to take place. And again, as a reminder, this is a dry run. I'm going live with the podcast this weekend, big 3-day weekend to do that. And then next week, some other folks will be showing up in free trials. So you're going to see more names in there that aren't, that you haven't seen before. Right now, it's just kind of a handful of us that keep bantering back and forth as we work out the bugs of it. So that's internal training for us. We'll get better over time. Don't expect perfection today. As far as esports is our theme of the day for long-term investing. So again, we do have one new name in the group. So long-term investing first, that's the focus. We will, as the open comes about, start talking about some short-term investing. But the day trading, but then that's not really, we don't want that to hijack the learning part of it. A lot of that's just to show you what's going on. We'll take a trade today and go from there. The build wealth incrementally over time. If you decide to day trade, that's up to you. For folks that you have paper accounts, that's what you should be in until you kind of cut your teeth. And then that's, or you can do real money if you want to from there. And we're going to have a competition today, which I'll explain here in a little bit. Okay, we're going to do the market for as far as the flow, market review, headline review, talk about the esports names there, and then go into our short-term discussion. Then we'll have our Q&A. For the new folks to the room, Q&A is off to the left, so feel free to populate that at any time when you have a question, and then members of the room can upvote that. We see a couple more folks floating in there. Standard disclaimer and tech support issues, so all that's available at ototnow.com. So let's click over to share out the OTOT website. I want to show you that real quick, just to kind of give you a big picture of what we're talking about here. So you understand, because you're kind of the core members, and then as this matures over time, it's going live basically June 1st, which is Monday's a holiday. So then we got 4 days after that for more practice, and then it's actually live at that point. So here's the on time on target, and then what happens inside of on time on target is I have special squadrons. Of this is one of them. So you can see the morning flight brief there, which is free until June 1st. As I'm going over at the podcast, if you listen to that, great. If you don't, that's okay. But at the end of each podcast, it'll close with, hey, for those who want more, check out ototnow.com. I have 3 squadrons that are available for you to join if you want more information, all covering different things. So again, it's investor education with the morning flight brief. And then the next one will be a Friday program that's a market recap roll call. There's another plan I have for that, thanks to Predator for bringing that up. So I'm going to switch this. I'm going to get my vision figured out this weekend on what I want to do with that. But one thing Predator brought up is education's nice, and that's why you should be here. That's the primary mission of the room. However, you need to keep it fun. So that's why we're having a little bit of a competition today to keep it fun. And in the Friday thing, it's going to even be more social because it's the end of the day. It's not quite as intense as the market open can be. So, and then the last one is the last quadrant I have there is the accredited investor quadrant. You see scrolling up from the bottom. And again, accredited investor is your million and up crowd with investable assets or your high income earners. This is where I'm going to bring in, this will be a Wednesday night deal. This is not live yet. It'll start in August when I'm ready for it. But this is where I'm talking to folks like Blackstone, KKR, commercial real estate, opportunity zones, things that you are just kind of, once you're ready to move beyond stocks and bonds, that's what we'll be talking about in that. So I'm not trying to sell you on this. I'm just telling you that these are the things that are out there. So we can leave that and let's go over to the TD Ameritrade board and we'll look at the review. So again, what you're seeing here left to right is 1 year. We had the big run up, obviously, till COVID hits us. We dropped off that 35%. We've kind of retraced that. So when you look off to the right there, we've been talking about the channel trading between 275 and 295 on the SPY. We did break out of that a day or two ago, but then yesterday kind of fell back in and we're kind of evened up this morning and kind of trending up. So really big news for the market from a technical perspective is if we can break higher and hold the 295 level, that is really good. If we kind of stay in the channel, then you expect to stay in the channel from there. So move over to charts. We'll look at the action in the last. So the big chart there is the SPY. Basically the action into the close yesterday in the white space there, kind of finding its way into the close. We ended up down a little bit. And then you see the futures, we started way down at the where you can see with the dashed line there, and then it's been kind of a straight up. So expecting with that kind of market trajectory, you would think that the market's going to start open if the stories continue. And then we'll go over to the calendar for today's earnings. Really, Alibaba, I haven't seen the news blurb across it yet. I don't think I've missed it, but if you look at the bottom there, Alibaba is obviously the Amazon of China. Baba's come, all the Chinese stocks with the U.S. trade tensions that have come up in the recent announcement that they might possibly get delisted off of the U.S. exchanges. All of the Chinese stock, I think that is a Trump bluff. That's my opinion. I don't know, but certainly being careful in Chinese tech names. So that's where we want to focus there. Okay, let's go to the CNBC.com for the headline review. And we'll go around the world real quick. So what you see here is there's where the stock futures are. I'm going to take us around to, you can see the NASDAQ's down a little bit, pretty much right across even across the board though. When you look at Europe, pretty much even across Europe. Asia was down. You can see this is Hong Kong down pretty big. I can't remember the headline, but well, there it is. Beijing plans to impose new security laws. So the tit for tat between China and Hong Kong that's been going on forever continues. So that shouldn't directly affect the U.S. markets, but again, Asian markets being down does weigh down a little bit the U.S. market. Okay, there's our results from yesterday. NASDAQ almost 1%. Tech took a breather, and big names like Boeing and Raytheon actually kind of carried the day. So if you saw some green numbers on a down day, you're welcome. Here's the bonds. Not too much changed in the bonds, even though they did release the 20-year, which we talked about yesterday. Oil down for the first time in a while. It's been kind of a straight march up since the negative news story up to just above almost 34, I think it was yesterday. You had those two together. So a little bit of a break there. That's not uncommon, not anything to worry about in the oil market. I think we will see the oil market continue to get healthy over time. And then as we generally talk about with the precious metals, you can have these if you want. I like silver better than gold, but again, they tend to move opposite of the market, but that doesn't always hold true. Okay, going on into the headlines. So we just talked about U.S.-China tensions increasing. Trump, obviously, that's on his agenda. I think not only is it on his economic agenda, but it's also on his reelection agenda, right? Let's look tough and continue to kick China in the teeth. So that's what you can expect to see more of there. Interesting headline. I liked it from a financial perspective of not closing the country if there's a second wave, basically. So big picture, I think it was a largely self-inflicted wound. Whether we should have or not, you can decide on your own, not trying to get in your business. But I am saying that it was a self-inflicted economic wound, and I don't think we'll do that again to the same level. That's my take. Okay, scrolling on down here. Big Short investor Michael Burry, if you saw the movie. So when you think of the big names out there, which of course I consider them all mentors that I've never met, but I follow about 10 names out there, and Burry's one of them. And it's good to see, because Buffett largely went to cash, which is not what I was doing back in March. I did a lot of buying during the sell-off. So you followed me during that time. I was continually, I had the lock and load slide one day early on March 22nd. Technically, it was down the next day on the 23rd. But I was glad to see a big name investor, not trying to put myself in that club, but following a mentor that actually did the same thing. And obviously you've seen on the charts how big the rebound's been. All right, let's continue on down. Postal Service is a topic for another day, but there's issues. There's a plane crash. Have not seen why. Let's go ahead and we'll see what other headlines are out here. Nothing really jumped this morning as to be a big market mover. All right, don't see anything else to talk about there. Let's go over to the Schwab platform where we'll talk about our theme of the day, which is esports. So as you know, long-term investing, which is the focus, that's how you get rich and capital appreciation over time. So what we're talking about today is esports. So when you think of an investing theme, what's the theme here? Well, before COVID, it was a theme. So start with that. We're getting into esports is just insane. And if you have kids, you've probably seen this. So they're gaming, they're spending lots of money either on equipment, headphones, they're spending money in game, because now some games like Fortnite that we've talked about, which is on, Epic Games, Tencent Holdings, which is lower right there, TCEHY, Chinese firm, so danger. But that's a theme. Kids are staying home. They're crushing these games. The games are actually pretty amazing. I stay away from them myself because I actually, as a kid, loved games. So I don't want any part of that because I don't want to but I choose not to allocate my time to that. I'd rather be business and family. Those are the priorities. So, but if you want to invest in this as a theme, I put the two ETFs up top. So ESPO is probably the cleanest, if you will, because the name esports is right there in the name of the ticker. And then Hero is another one. And I don't really know the difference between the two, other than, to me, I think ESPO has been around longer. But you can really see as you go left to right there, the big, and maybe Hero's new. That's what I'm seeing actually with the reduced chart there. And Predator, I know you know this name, so if you want to talk to it at all in the chat there, throw some thoughts in. But for ESPO, you can see the big run into March. It has already more than recovered from where it was from the big sell-off. So that's what we have in ESPO. So that's kind of the big name, if you will. Hero's another name that I would have no problem buying here. You're like, well, they've run up so much. Well, it's like, yeah. So did Microsoft if you followed that for 20 years. So don't worry so much about the entry point from price perspective. Think about, is this something I want to put my capital behind and for a long term? So that's why I support both of these. Going down to ATVI, it's basically Activision, Take-Two, and Electronic Arts. So again, we always talk about if you don't want to try to pick best of breed, pick the ETF. That's where I am in this space because I personally don't have the expertise and don't have the inclination to build the expertise on what's best out of those three companies. But they are the big three. You can see that they all have a little bit different path of recovery there. But those are individual names you can get into if you want. And I think those are all going to be long-term winners. The only long-term loser in the space was GameStop. So when you think of ETFs, core companies, and then you think who else, like medical provider, we talked about Medtronic as how to invest in the medical space. Well, as far as, GameStop was this store that ran up for a long time. It's pretty much dead now. You can just download these things real time. So Yeah, I hear you there, Predator. They turned literally, if you've been to Vegas recently, I know it's closed now, but back when it was open, um, the Luxor, they've basically turned it into an esports arena. It says so like on the side of it. So totally rebranded. So that's pretty cool. So I see a game name. Yeah. So downloads, yeah, the console thing. I know PlayStation 5's coming out. I get some crying about it around the house about why we don't have one, Daddy. But you don't, so move on. Yeah, if you don't see Pred's comments, remember, check at the bottom of your chat. You should be seeing all panelists and attendees. So that's a good function um, for folks to see there. Okay, cool. Thanks for bringing that up, though. That's how we learn. So back to, we talked about the COVID deal for the long term, and it was already an investment theme, and then COVID hits. So for a long-term investor, you've got a whole portfolio of a whole bunch of different investment themes. You have to relook at every single one of them when something like COVID-19 hits. And does esports stand to gain from that? Absolutely. And that's where you've seen, buyers like myself or Michael Burry from the previous slide are flowing into names that are stand to increase and make a lot more money because of this. So it's kind of like maybe everybody stays at home and gets hooked on these games, which from an investor perspective you want, kind of like those that invest in Philip Morris and cigarettes, alcohol, that the sin stocks, if you will. You want people to be hooked on these things so they continue to make profits and make money. So, okay. So is there a good entry point on any of these? Absolutely not. This is what I kind of call the close your eyes and buy it stage. So if you opened up a new portfolio and you want to participate, you pick one and you kind of go from there. So that's what I've got for the long-term theme. Let's go over to the short-term theme. Again, we're here in the Schwab. We got Espo pulled up. That's not really a short-term theme. But before we'll go through our standard deal, if you have any short-term names and you want to put them in the chat that maybe you've taken a look at, feel free to do that. But before, I want to talk about our competition today. So we're going to run a competition. So if you go back to, I'm going to put you back on the main briefing slide where we talk about our short-term stuff. So we'll scroll down to page 2. These are my standards because we have a couple new names. I'll cover these real quick. So you want to set your risk unit. So this, again, now switching from long-term investing to day trading. And thanks to a couple of folks who've said, hey, you spend a lot of time on day trading, but that's not the emphasis, right? And yes, that's correct. So to reiterate, and I think maybe going to a competition based here will be a better way of looking at this, is you can make money day trading, but most people don't, to the tune of like 90% don't. It's kind of like active management in the market. Most people underperform. Well, the 10% who can outperform do very well. So I did a briefing a while ago. It's been, probably a couple months, but it's on my other website for the long-term investing stuff, to where I said, here's how to day trade and why you should. So for most people in here, open a paper account. You can do that through TD Ameritrade or TradeStation, where you basically, it's play money. So it's kind of like playing online poker for Yahoo chips or whatever. But you can learn the mechanics and you can learn whether you should or shouldn't do this, and if you have a particular preference for any of these. So you set a risk unit, which is basically how much you're willing to risk. In our case, it's $100. You risk 1 to gain 3 is your goal if you're actually taking this trade. And again, this is what I used for about a year and wrote a lot of work on. So it's risk adjusted. You only have to be right less than, a little over 25% of the time. Unlike there's a million other trading themes, then use those if you want to, where you can be right more often. I'd prefer to be wrong most of the time, but get paid when I'm right. So that's the philosophy behind this. So if you were to risk 1R and you bought 1,000 shares of something, that's a 10-cent stop. You can see the rest of the math there. I won't go in that today, but if you're new, when you get the video, or I'm not sending them out now, but when we get to subscription for the room, you can actually go back and pause these and learn a little bit more. That's all we're going to talk about there. So let's go to the competition for today. Everybody who's in the room can can participate, and it's very simple. The window is going to open at 9:20 Eastern, which is 1 minute from now. So that's when the window opens, and it closes at the opening bell. When you hear the ding, 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 and you don't have your trade in, you're done. You're going to put your trade into the chat. You get to choose one and only one, and the winner gets a free membership to the room later on, once we have the subscription. So in June, you can get June free if you want. For the rest of you, I'm going to have to boot you, of course, unless you choose to participate and pay. But we'll get more into that later. So basically, I'm giving away a free month in the room. So if you're good at this and you continue to win the competition, then you will continue to get months in the room for free. It is a beat Steve. I will throw a trade in there. So if I win my own competition, that's good. But if you beat me, fantastic. And we'll go from there. Today, I only expect we'll have 3 or 4 that even put trades in. So it's a good day to be in the competition. Later on, I hope to have 50 or so. We shall see. I may only run it on Fridays, but I'm going to run it every day, just pretty much to get the switchology down and the functionality of it down until it goes live on June 1st. And then probably every Friday. I'm not sure I'm going to try to do it every day. So the scoring. So at 9:30 when the market opens, that's the price you get for whatever you pick. So if you take Apple long $3, that's exactly what you would write. You would write the ticker, whether you're long or short, and then the stop, basically. So that's your 1R kind of stop. So if you ever hit your 1R loss on the chart during the first few minutes, and I'd imagine, I'll be surfing the charts to show you kind of whether you hit your stop or not, you're out. So that means you would have been busted out of your trade and lost an R unit. If you, after 20 minutes by 9:50 Eastern, your window closes, you get the most optimal price in that window, because again, it's a candlestick that floats around. So we give you the most optimal price there. If at 9:50 your trade has lost money, then you're out. We don't reward losers, right? You have to win, right? And then winners determined by total R units gained. I know this is new to y'all, so I'll help with the math. But if you took Apple long for $3, okay, and Apple opens at 320, 20 minutes later, it closes at 328, you've made $8 over a $3 up there. So 8/3 is 2.67 R is your score. If you took IQ short and it opens at 1550 and closes 20 minutes later at 1465, then basically you've made 85 cents total divided by your R, which is 0.10, which is 8.5 R. So if 2 people take IQ short and one takes it at 10 cents, the other's at 20 cents, meaning that stop is bigger, then that person would obviously make a 4R instead of an 8.5 R. So the closer stop, the more R's you can gain. However, you can also get stopped out, and you just have to get stopped out once, and then you're done. You can't kill a trade early like you normally would, and you have to take it at the open, which you wouldn't normally take it at open. But yeah, we'll have some fun with that. If it's epically terrible, then we will not continue it. But we'll at least do it today, and somebody gets a free month. So let's go up to the Schwab board to the short names. Bringing that up now. So on top 10 in volume, we do have Alibaba. Only a couple percent down though. We have Amarin, which is got the volume again for new folks in the room looking for 100,000 shares of volume minimum, and then gapping down 5 to 10%. I think Amarin's a medical name, but I'm going to pull it real quick on a different screen, so don't mind me. Finviz.com. I just want to see if it's a medical name. I think it is. Amarin. Okay, so upper left, yeah, let's put Amarin, AMRN up there. It's a biotech firm. Stocks falling, competitor got approval. Okay, here in the left screen, you can see under the news stories, hopes of more stimulus, blah, blah, blah. Slips go down to this one right there, the buzz. Okay, yeah, there's the headline that's kind of driving it down. So that's one we'll take a look at as an Amarin short theme. So back up to the upper right there, we'll keep that in mind. There's Aurora Cannabis. You could also take that short if you remember that story. So we'll populate that on the left-hand side as well. Taking a few notes for myself. It meets the 5 to 10 down criteria. It meets the volume. You're looking at a 5-day chart there. So again, it closed at 1740, but it's now trading in the upper left bid ask at 1590, 1592. So I do kind of like that from a short perspective. It could easily retrace, continuing back down to around 14s or so. So that's probably my favorite. I think I will take that one once we get to it. Again, we got 6 minutes to open, so we'll continue to look at things. We'll go over to the top 10 gainers tab. Oh, Palo Alto had great earnings last night. That's a great name. Cybersecurity is a great thesis to be in. So not quite enough volume, and I don't think it has the upside long. You could take it long. I think it's safe. I'll make a note of it, but don't plan on taking it. Splunk. Go ahead and put that on the left screen there. We'll see what the headline is with Splunk. Tech name, obviously. And don't see, click on the notable earnings one. There we go. Nope, don't have it. I think it's an earnings story, but look at that chart. So it's screamed basically, this is a 5-day chart. It's moved up 150 to 175. Currently trading down 173 or so. So yeah, I'm not going to touch that. Okay, let's go to the decliners. Intercept Pharma, a little light on volume, but gapping down 10%. And then 9% Monolithic Power System. Go ahead and put that over. I'm not familiar with MPWR. Don't see the news story. 202 trading down. That's a huge bid-ask spread, so we're not even going to touch that one. Okay, let's go to the 25% gainers. Elf Beauty, that's kind of a return to retail. The retail names have popped up. Not going to touch that one. Light volume, pretty light volume all the way down to Twilio, gapping up 4%. In the middle of the pack there. Not really enough of a move. And let's check the NASDAQ real quick. Tab, the upper right there. Thank you. I thought that said Tesla, but it's not. It's Tiziana Life Sciences. All those are pretty light on volume, down to Splunk, which we already talked about. Aquestive Therapeutic, 5%. Pull that one. AQST. All right, currently trading at 650, went all the way up to 680 yesterday. This is a gapping, or excuse me, that's in the after hours. It's run from 6 all the way up to 680. At 650 now. Click on that Form 8K above it. Headline, nope, nope, nope. Click on the bottom one, the announces advancement. Okay, new drug. If you want to do biotechs, you could do AQST long here. I don't know enough about it to really put a lot into it. So I'm not going to recommend that one. So for me, what I would be looking at, again, I'm not taking these actual trades, but from a paper perspective, Amarin short, ACB short, and PANW long. So let's go back to TD Ameritrade. We've got 2 minutes prior. I see one trade in. And then charts page, please. Okay, upper left, put AMR in. This is Amarin. And then I want ACB, upper right. It's okay. All right, and then bottom right, I want PANW. So 1 minute to the open. PANW, sorry. Okay, again, it's Amarin short, ACB short, and PANW long. If you want, for my trade, put in that AMR in short 0.20 into the chat. Go ahead and get your trade in there. You've got probably about 40 seconds. So on the main screen, I'll go ahead and draw on it like I always do. Once that's trades enter there, I will draw the entry price Thank you. So that's my trade. And we'll wait for the bell. I'll get the trading set up here. And Predator, I'll roll over to those other two names once we get the opening done here. There's the opening for AMRN, and I said I am, what did I say? A short for 20, so I go up to 670. This would be my stop. And again, looking for that 3R, which should be, again, 66 down here at 5.9. So we won't actually, let's go to today's view, expand that out a little bit. So here we are. That's, again, the current stop price. I may even get stopped out here real quick. We're going to look at ACB. That was a short. Again, that looks like that has opened up and gone down. Nobody took it for the actual trade, but I do like the action on it. And then over here with PANW, that's actually came down first. So about $4, and then we'll see if it ends up going back to the upside. So boom, here's mine. I'm already dead. I'm out of my trade, so 670. So I'm out of the competition. So what I'm going to move now is to HSBC on the main screen over here. And then we will keep ACB up, and on the lower right, we will put, so we're going to put, what did I say, HSBC, upper left there. We'll come back to that. In lower right, we want to put AQST. All right, so we'll go back to the HSBC. Is a short with an upper stop at 20. So the open for, I'm going to grab the mouse. It looks like that went against us. So again, at the open price was 23.33. So 23.33 is right there. And the 20-cent stop, we're going short, so 23.53. Oh, you may be okay. So make sure, double check my math. 23.33 plus 20 cents is 23.53, which is way up here off the chart. So we'll just put it at the top of the chart for now. So you're still in that trade because you hope for it to reverse anyway. So somewhere up in there, again, we'll get to that in a second. Then over here on AQST, short with the 20-cent stop. I like it. So the open, I have to zoom in on this chart, see what the actual open in. That may not have been the actual open here. It's 23.33. It sure looks like the open. So yes, that is the bottom of it for candlestick review. If it's a green candlestick, it's open of the minute and then close of the minute. And then during the minute, this is where it traveled, was the full length. So we're going to have to zoom in on this, get over to the better screen for us. So it opened down. So your open here for this trade was 652. And a 20-cent stop, we're going short, so it'd be 672. So that's where we are there. Checking back with ACB, let's focus in. So both those trades are still working. Good job, fellas. Let's see where the volume comes in. It was down, so it opened here and ended up down. So 15.9 is where ACB opened. $15.95. We didn't call a stop, but let's say it's 20-cent stop for this one, $16.15. It's generally about what I use. I'll open it up to 40% if the name's a lot higher. And then of course the $15.95 minus 60, $15.35. See if it gets to down here, which I actually almost touched it. We'll let that $15.35. See if I can draw over top of that. So it may have even hit it. We'll let that expand out a little more. So those are the trades that we're in. Couple guys still live, so that looks good. And go from there. All right. So paper trading on Thinkorswim delayed. Oh yeah. Yeah, so that's where your benefit, and honestly, I think it's a coup. Good job, Burner, to bring that up. So when you look at these things for day trading, you basically have to have real-time data, which I pay, I don't know, 120 a month or something for real-time data, and I also have level 2. We'll talk about level 2 here in a little bit. But basically, when you have to have real-time data. Now, when you look at CNBC.com, that's real-time data. So the bid ask that you're seeing there jumping around, and that's what I would generally do if I were didn't have somebody have it up on the screen. But if you're doing some trading and you're not going to pay $100 a month or whatever, go to CNBC.com, put your ticker, and then if you look at the tab across the top, you can actually watch the stock price there. So those bid ask are accurate to the real time. Everything else is delayed. So if you pull a chart and all that stuff will be delayed. Okay, let's look at some other, yeah, so that's where some folks there, Burner, good point, will come into a trading room just for the live action. And over there on the bottom right, AQST short, looking pretty good so far. We'll see if that continues to roll over there. So already down 622, already down over an R, so that's pretty good. Our HSBC trade is in a losing money situation there because we took it short. But I don't mind that action. I would not be scared out of that at all. If anything, I like that double top that was right there. You know, so that's a good sign. If it goes back up to that 2341 and keeps bouncing there, that's a good sign because eventually there's going to run out of resistance there and it's going to roll over from there. Okay. Went long Boeing. Good job putting all the stuff in the chat. Long Boeing. 140.99. It looks like got stopped out. Yep. Short Amarin. Sold shorts. Yep. Bought the cover. Yep. Yeah. That happens. That was my trade, right? So I was out like instantly. Good for me, right? And then real-time data on Thinkorswim with live trading includes level 2 quotes. Yeah, I do think you need to pay for that. I don't know. I'll talk to you later about that, Burner, about if that's actually the case that you're saying there. Okay. And then how is ACB doing? ACB is working out better than any of the rest so far. I don't know. We'll see. It's kind of tied with AQST, so both going pretty well. So let's take a look at TradeStation paper account. Okay, so Predator, pretty smart on the TradeStation stuff, been using it for about a week, so there might be some academics coming out to folks that want to participate in this. Again, you can vocalize your trade and participate in the competition just by typing that one line, right? And I'll do your math for you. But for those that actually want to go in and go through the switchology of selling short, how many shares, oops, I messed that up, go back and redo it. You can see it's actually pretty fast moving ball game there. Okay, let me scan through the chat. Okay. All right, looks like we've covered that. All right, as far as the overall market, let's go to switch to CNBC real quick. We'll check back on our trades in a minute. I'm sure you guys have them up on the side. We'll scroll up to the top. What we're looking for is to kind of see how the overall market is doing. Still showing Dow futures, so we're going to refresh that real quick because I saw the breaking news line. Okay, Dow falls 100 points. So where are we? Okay, we opened in the green, which was what, 9 minutes ago, and immediately we're down 100 points. We'll see if this Biden thing is a headline. Maybe he's talking. No, that doesn't look to be live. So we'll go back up to the top. So you can see how far has the market moved, basically down 0.5% in that first 10 minutes. Now, when you're in a trade and the market moves with you, That's like added cheese, right? Because everything's moving down. So it's when you're swimming upstream. So when folks ask, hey, when would I kill a trade early? Well, that's one of the times when I would kill a trade early, is if if the market starts screaming up or down and it's against my trade. Well, if you're negative in your trade, you're probably going to hit a stop, right? So you're probably going to be out before you can kill it. But if you're up an R or 2R and trying to hold out for those 3Rs, even though normally I'm a huge proponent of waiting for the 3R payday, that's when I would actually kill the trade and go, okay, I'm going to take what I got. Good for me. I made some money. Market's working against me. I'm out, sort of thing. Other things you can watch for while you're in the trade. Let's go back to the TD Ameritrade's screen and see our trades there. The ACB trade looks like in the upper right, looks like it either busted out or not. So anyhow, that's a case where you can point to, it dropped all the way down to 1540 some. Well, actually, it looks like the red doji, we might have actually hit the 3R. Nobody took this trade, so it doesn't matter. We might have hit the 3R level. And then, yeah, it looks like we did. Of that bar, if you can focus in on the one red bar that goes all the way down there, put the pencil on the exact bar. Nope, the left one, that one. Okay, hold that thought. Unclick that if you can. There we go. Go back to the bar with the pencil and hold it there. If you look at across the top, 1579, low 1534. So it actually went all the way down to 1534. So if you had that trade, you would have made your 3Rs, and you can see how fast it reverses. So if you don't have a stop in and you're not paying attention, you could go from 3R to -1R in ACB in what, 5 minutes? And you'll see that if you do this often. You know, when I was doing this on a daily basis, it's like heartbreaking, right? That's where discipline and patience pay off. Follow the math. Don't outthink yourself. Don't sit there and take multiple trades a day. Don't go right back into a name. But that's a case where that trade worked and then failed a few minutes later. So you'd want to, that's why you have that stop in there. So if you make your 3R, you're happy. If there's a case where you make 2R, maybe hit that 3R stop and just go, I'm going to sell 2/3 of my shares, because you think it has more room to run. You can get a little fancy in there, but that's really higher math for another day. But on this same screen, if you look off to the left, I want to show you a couple things. There's a bunch of stocks in the green over here. These are names in a watch list. So this is how can I tell if I am doing day trading, that doesn't absolve me of my responsibilities to know what's going on in the market. So that's another way. If I can see some names in the green there, but they're not up a lot. And then as you scroll down, you can see a bunch of names sitting flat, and then all the way down, you can see names all the way down. See the worst performers, BRBS, Blue Ridge, that's a bank, down 28%. So again, you never know if that's I need to sell that or I need to buy it sort of situation. Depends on the thesis there. So all right, let's take that all the way back up to the top. Okay, now another quicker way to do it is to be able to just click on the percentage there, click that, and you can see everything in reverse. I don't like staring at red necessarily, so I kept clean green up there. So that top holding there, go ahead and click on that again so that whole verbiage comes out right there. How'd you do that a second ago? There you go. Where you can get to see the whole words. So right there. So what it is there is you have, that's an option. So just a little bit of education here. Palo Alto Networks. So that is June of 21, June 18th of 21. So that's the year 21/06/18. So June 18th of 21. That's a call, and the strike price is at 230. So anyhow, that's how you read that. All right, glancing over at the trades, both appear into the green that are live there for our HSBC and AQST. All right, we'll leave that up while I go over and take some questions. Again, as we go to the Q&A for our remaining 15 minutes here. There I see, there are, good question. I would say TradeStation is probably your best academics. You can go to YouTube, but you're going to get a sales pitch. That's the difference. If you go to YouTube and go, how to day trade, oh man, you just blew up your computer for like the next 3 months with advertising. So thanks Google, thanks Facebook, thanks digital media world. But if you go to TradeStation, you can do a free account and basically take a look at the trading tools that they have. So the bottom line, and if you're interested in trading, you need to pick a system. I only offer one. There's 1,000. I believe in this one. This is the one I studied for my dissertation and then failed on it because NCU was going to make sure that I published it. And I can't have that, right? Because it's my proprietary trading system, of which I've only detailed a fraction of for you guys, and that's probably all I'll give you. But there's gap fill strategies, there's all kinds of strategies, blah, blah, blah. Go to TradeStation, and there's a source out there. Thanks, Predator, for throwing that up there. Okay. Off into the questions. Since we're talking trading, Burner, I'll take your question first. When setting the stops during a short-term trade, can you talk to the pros and cons between doing a stop limit or a stop market, and what do you recommend? You want to do I don't have it in front of me, but this is where the academics will tell you. It's basically a stop limit. So back up and think investing. When you go to invest in a stock and say, I want to buy Apple and I don't want to pay a whole lot for it. So Apple, say it's sitting at 225 and I only want to pay 224. So that's a limit order. You put, I want to buy 100 shares of Apple at 224, and you let it sit, and it has to hit that level, and it will only buy if you hit that level. So that's a limit order. Now, stop limit is once you go into the stop limit in a day trade. So in your situation, let's see, this is Burner's question. So your stop limit on AQST short, going to the chart, you entered the trade at around 653-ish. So at 673, you would put a stop limit at 673 for all your shares. And how that executes is if any tick, which again is any trade, touches 673, then that switches to a market order. So that goes away and it goes sell all of those shares at a market. If you do a stop market, that means whenever you click on that order, so that means you don't have stops in, you're just going to sit there and stare at your day trade, which you think, okay, that's easy, right? Well, here's the issue. If you stare at your day trade and the doorbell rings or whatever, you can miss something. However, if you lose connection, you don't have any protection in. Yeah. So, and then it takes you 5 minutes to reset your Wi-Fi and get logged back in. You could crap yourself as to what happens when you see when you pop back in, right? So that's why you want to put the limits in. So it kicks you out of the trade automatically, because again, once you put that trade in, even though it's sitting on your screen, you've put that off to a server. It actually exists and will execute right when that happens. So the stop market means you sit there, you have it under the gun, and then you put it in. So if your system has, sometimes the verbology is different. So if Thinkorswim, if that's what you're using, we'll see. So go ahead and we'll get rid of that one. Yep. And yep. Okay. If a stock GERN sets up an equity offering and the stock trades pre-market way lower, is it something to short? All right, I'm going to pull it up on a different screen on FinViz just so I can kind of see what you're talking about. So pardon me for some side screen usage here, just to GERN. And then we'll talk about these concepts here in a second. Okay. So I've got that pulled up. So the stock's sitting, yeah, down 27% today. So it's up around $2, and now it's down at 144. And the headline sets up an equity offering. So they're issuing more shares, which is often the sign of a desperate company. It's the sign of a growing company. If you're growing, you offer more shares, you get more capital, you take the money in from investors, and you go do great things with it. Period. Dot. If you are about to die and can't pay your bills, you're going to issue more stock, see if there's people on the planet that are dumb enough to buy it. And if they do, yay. And then you go from there. So no, you can short into that. I like that concept. 27% is a big move down. So that would be the red flag there, is how much further is this going to go? It's kind of already priced in. If we're down 5 to 10%, that's kind of that sweet spot and moving down from there. Okay, so we'll clear out that question. We'll go back to the trades and we see how we're doing. So 23.32, or we'll get you your best number there. So it looks like for Predator, you are in the green. We'll go to the most favorable. Yep, so you get the bottom of the tick there. So that's 23.32. So you made 1 penny into a 20R. So you made 0.05R. That's me thinking out loud at the stop point. And then for AQST, are we still on minute 20? Yep. Put the pencil over the actual doji there, the green one more over. There you go. Pause for a second. Okay, you are, looks like the bottom of that is at 638. We'll let the 850 close out. Minute. There, it moved on. So at the bottom of that, looks like the one in red there, 638. So 53.15 cents into 20. So 0.75R for who took this one. Burner one, 0.75R in your trade. Very nice. Again, 0.05R. It looks like maybe you got a little bit more there if you toggle back to this one. The red one, bottom of the doji, 2.9 on a 33 entry. So 4 cents. So 4 cents into 20.2R. Yes. So our winner today is AQST in the trade. So well done. You get a free month in the room. So if you have any questions on that, ask those in on how I did the math there. If you think my math is off, then of course. Yay, congrats. $20, all right. Shorted LK. Pull that LK up in the screen. So that's funny you mentioned that. So LK, go to a 5 minute, 5 day. There you go. So LK was the name that we had. Make sure I'm on the right chart here. Yeah, is that the one we have shared out? Okay. Sorry, learning on my end. We shorted LK back a couple days ago. Well, it continues to be a short. And again, LK was the one that stopped trading for several days. I think it was like 3 weeks because the books were cooked. They reopened trading for LK. That's when we shorted it. I think we got busted out of the trade, actually. It might have been a couple days ago over here to the left on that big spike up. But you can see from there, it's basically rolled over, and it's a long-term short. And you're like, well, how far could it go? Well, it can obviously continue down pretty significantly. So there are some trading methodologies where you only follow one stock, or you only follow things. You have to be a pattern day trader at that point. You have to get the IRS election, which I think is a section 275 or 475, where you don't have to worry about wash sales. So it's an issue there to be able to not have to worry about that stuff. But yeah, that's a trade that's continuing down. AMC is another name we took, 2 weeks ago. Go to a 15-minute. Go 20-day chart. There we go. We took that on short on that big spike up, and obviously I said on that day it would go down to 540. It hit that, and then it's basically continued to sell off there. But when you look at that chart, you can go, okay, well, that's done, right? It's spent 3 or 4 days at 460 plus or minus 10 cents, so you're kind of done for there. Okay, so let's bring that down and go to the screen for CNBC. And refreshing that, we'll see how the market's doing here. Okay, so down a little bit. NASDAQ's actually up in the green. That's close enough to call even. You don't see any breaking news. They still have Biden's picture up there, and that's an old story. So really not a whole lot moving the market there. Last question I'll answer there is, how does the presidential election, unless you have another one, how does presidential election feed into long-term investing? Is known Trump better for the market? Okay, you asked, so you get the answer. This is an opinion. The known is always better than the unknown. Now, obviously, 20 years in the military, a couple degrees in military strategy, that's where I'm basing this opinion on. So when you think of why does Steve think this way, that's the lens I am looking through. Think Saddam Hussein, taking him out of power in Iraq. And yeah, I was there, and yeah, I helped. But yeah, the devil you know is better than the devil you don't, right? And we still kind of, I would contend, don't really know what's going on there. So you cut the head off the snake and the snake dies. That's Rumsfeld 101. Reality is you cut the head off the snake and you don't have any idea what you got from there. So when you look at sorry, got sidetracked there for a second. So the Trump situation. Obviously, he is a known from his hot button issues, right? And those aren't likely to change. Maybe there's a secret agenda, but he's a pretty open book. When you look at Obama going into a second term, you know, it's like, hey, if he gets elected, what's he going to do? Are there hidden agendas? And I do believe, if you remember back, he did have some that people were worried about. That, okay, if he gets reelected, then your second term of your presidency is the one where you get to go do what you want, right? So I'm sure there's some Trump stuff that would be like that. But generally, he's a known versus what would Biden. A lot of that, you know, depends on who ends up on the ticket with him. But anyhow, that's something to consider. So I think Trump would have a lesser impact to the markets because of the known quantities versus the unknown quantities than Biden or anybody else that gets elected there. So there you go. All right. So hopefully that answers your question. It could go either way, though. I mean, elections, we're 6 months out from a major election, and we're not even talking about it. I mean, for the most part. For the most part, we're stuck in COVID mind frame. So, all right. All their resources estimated a 30-35% drop in the market with a non-Trump win, but this was before COVID. If Trump inserted, they expected. Okay. City Wealth, blah, 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 analysts, blah, blah, blah. Okay. So what you see on analysts have to analyze something. So they have to produce material. So those, I would say, whoever's producing stuff that's anticipating 30 to 35% or 25 to 30% drop. I mean, yeah, that's pretty sensationalized. I would almost automatically throw that out because of just that's such a big projection. I think a better projection would be it's going to trend up or trend down. And if you were going to put actual numbers into it, I would probably cut those in half at the professional level. So let's see. All their resources, analysts never agree. You can actually find sometimes two analysts from the same firm putting stuff out that says different things, which is kind of funny sometimes. And they get called out on it on Twitter and Seeking Alpha. But yeah, so when you see sources of information, you want to synthesize all of it together. So we're all a sum total of our experiences. Same thing with financial information is you want to synthesize all of that. Those are pre-COVID, which I think are good points, pre-COVID. Post-COVID, and I may put a video out tonight. I saw one that's pretty good to think about. Post-COVID, it now becomes, how are we going to unwind this quantitative easing from the Fed? What are we going to do, and what's going to be the, second and third, I'm blanking on the word, but what are the unintended consequences, right? And the second and third effects, if you will, from what we're doing right now is zero interest rates and pumping all this money into the market with another $3 trillion bill under the hammer. If it can ever get passed, I don't think it will. I think it will get cut down significantly and then passed. But is this going to end up in inflation? Is going to end up in deflation? All of those things are far more concerned. Those kind of taken the day. Is coming out of 2007 to 2009, that was the biggest concern, is how do we get back to normal? And we tried. It took us like a decade, and as soon as we tried it, the virus comes in and really kinds of wrecks things. So, that's what I've got for you today. I see some other stuff popping up in the chat. Election betting odds. Okay, yeah, there you go. You don't have sports to bet on, so certainly folks can throw some stuff out there with their ideas. So that's what I've got for you today. Do give me some feedback for those that are texting or email or whatever, or shoot it to the steve@ototnow.com tech support line. Let me know if you liked the competition, didn't like the competition. I can't plan on carrying it into next week unless you have a reason not to. So with that, thank you for your time. Hope you enjoyed it, and I will cut you guys loose for the day. You guys have a good one.